Charlie Munger once said something that quietly reveals why most people really build real wealth. The big money isn't made in buying or selling, it's made in the waiting, or as he bluntly said, is sitting on your ass. The idea is deeply uncomfortable in a world so obsessed with speed, day trading, crypto, overnight millionaires. We're trained to believe that if we're not constantly doing something with our money, we're falling behind. But what if that belief is exactly what keep people poor? This is what Charlie Munger says. And again, he was one of the most successful investors over time. Let's put it into context. If you've saved $100,000 already, you're pretty close. You've already done the hardest part. You built the snowball, as they call it. And then from here, getting to $1 million isn't finding the next Amazon, Tesla, or NVIDIA, or timing the market perfectly. It's just letting time do the heavy lifting without you sabotaging the process. Most people never fail because they earn too little. They fail because they get impatient right before the compounding takes over. And this is what this is all about, is compounding over very long periods of time and having the fortitude to stand through bear markets. So the real problem comes, let's say your 100 goes to 250. Anxiety shows up. Inflation feels scary. The news is terrible. It's always terrible. And then suddenly $250,000 doesn't feel like freedom. It feels something fragile. That's when people start focusing on returns and trying to force returns. They take bigger risks. They chase excitement. They spend money they shouldn't too early. They interrupt the very process that was about to change everything. This long-term compounding. It's like the greatest invention, like Einstein said. So let's strip this down to make it super boring math. Usually, normal markets average between 8 to 10%. Money doubles every 7 to 9 years. That means your 100 went to 200, then let's say 250 becomes 500, then it becomes a million, then 2 million, and then soon after, X million. It's just math. What's wild is in the next few years, more wealth is created than in the first 15 years combined. Here's the catch. Your early years feel so difficult, like you're not going anywhere. Nothing changes about your life at first. And unfortunately, this is where most people quit. The real enemy, as Charlie Munger states, is something so crucial. The enemy isn't the market, it's us, it's human behavior. People sell when prices fall because there's always going to be bear markets. And then they do the opposite. They buy when excitement is at its highest. They pay high fees. They tinker around. They constantly are looking for something new, a new stock. That single 1% fee with these money managers quietly destroys wealth over long periods of time. It's not because the math is hard. It's because patience. This is the key word, patience. So what does winning in the stock market actually look like? Winning doesn't look very impressive day to day. It's very boring. It's like watching paint dry on the wall. It's like holding during crashes. It's like ignoring the headlines. It looks like doing nothing when everyone's panicking. Munger calls this sit on your hands investing, or sometimes I've heard him say sit on your ass. But who can really do that? Most people can't. And those that can are the ones that get rich and they get free. And really, this is the whole purpose of this. The journey isn't about all the luxury cars and the yachts and the big houses and all of that. It's to be free, to be independent. It's meaning never to compromise your values for a paycheck. It's about you owning your own time. It's turning your 100,000 that you worked so hard for and saved into $1 million. It's simple, but it's not easy. It requires patience in a world designed to steal your attention. And if you can endure the waiting and the boredom, the math will take care of itself, the compounding. And you have to have a very long-term perspective because there's going to be ugly periods like 2000 and 2010. So if this perspective helped you think a little bit differently about money, please consider subscribing. This channel is about lifeless principles, not hype, not get rich quick and lose your money. I'd like to hear from you in the comments. what's harder for you, saving the money or leaving it alone once it's totally invested? Really, this is the key. So I'm here to try to help you. None of this is personal advice. It's very general education. And again, always past performance is not indicative of future performance.